So what a week it's been for the big tech. We now have Amazon joining the list as it's down massively in pre-market, and we'll have a look at their earnings and what's going on. But wow, what a week. I mean, we've not seen a week like this for, I can't even remember last time we saw a week where the big tech absolutely crumbled. We were basically left with Apple going, everything's all right, honestly, while everything else, the other big techs are taking massive dives. I've got to say the small caps and mid caps have been doing okay in this earnings week, but the big tech, wow, it's been absolutely killed. I'm not used to putting all these big techs in thumbnails with red backgrounds and flames going on. It's been absolutely brutal. So let's look at what's going on with Amazon today and if it's an opportunity to buy after the dip, after earnings. As always, hit that like button, and if you're new and you find this video helpful, make sure you subscribe. Let's get stuck into these Amazon earnings. So originally the share price was actually down 20%, but there has been a few buyers coming into Amazon stock. So it's actually now down 13%, but that will mean that Amazon is going to open up around about the $97 range, which will mean double figures for this stock. And that does mean that it will lose its $1 trillion status as it is at the moment. And it does trade at 99 times earnings. And you'll be able to see here that that means we'll put Amazon actually around that CV dip, and even back to prices it was at in around about 2018 as well. So yeah, that means we've had a lot of share price appreciation. All that revenue and progress it made through the CV times gone, and yeah, back to about 4 years ago, which is absolutely crazy. So let's look at the numbers and let's look at the obvious reason why the stock is dropping. So if you look at the EPS, it was a beat by 0.07, so that was absolutely fine. You see revenue was a miss by 370 million. Now when you're doing 127 billion in revenue, 370 million is not that much, so there wasn't that much worry around that miss on the revenue side of it. Peanuts compared to your 127 billion you're putting in revenue. And you'll see here this actually meant that revenue was growth of 14%, which is actually really good because we've seen a bit of weakness in the revenue growth of Amazon recently, so this was actually pretty impressive growth. Now we'll have a look at the breakdown of Amazon Web Services in a second and the regions and the revenue growth there. The big thing that was the standout straight away and was, I would say, 60 to 70% drop on this earnings report was the guidance, and it was this little line here. So the company's outlook is very much behind what Wall Street and analysts were expecting. So they said they're expecting to see revenue between 140 billion to 148 billion, which is quite a big range, with the expectation from Wall Street being 155 billion, and also operating income expected to be between $0 to $4 billion. So this is a massive reduction here on the guidance that was given. Now Amazon said the reason why they're seeing this at the moment, or why it's having such low expectations, is going into this quarter so far they've seen a lot of weakness. Now the problem is that that would be between 2% and 8% revenue growth. Now obviously coming off 14% growth and going down to 2 to 8% is a massive reduction. Now like we said, that is quite a big range given, and if Amazon did come in with 8% on the higher side of it, you'd actually say that is not too bad. The problem is if Amazon comes in at the lower end, around that 2% range, because obviously one of the big growth sectors is Amazon Web Services. As we can see in this quarter, it grew 27% year over year, and more than likely that is still going to be a pretty strong quarter, even if it has a little bit of weakness and it comes in more towards the side of 25%, 24%, that's still good amounts of growth. Now the problem is that when you factor that in and it comes in at 2% revenue growth, that really suggests there's a lot of weakness in the other parts of Amazon, or the retail part of Amazon platform, and that could potentially suggest negative growth in that area. And that's where the markets are a little bit spooked, is there going to be that much reduction in that area, or are they seeing a massive weakness in the Amazon Web Services, and actually we see Amazon Web Services dropping to 10% growth, and then that spooks the market. So yeah, the lower growth is really spooking the market at the moment, and that's, I would say, 60 to 70% of the drop is because of the guidance that we've just seen from Amazon. Now, actually digging into this quarter, like I said, a lot of this drop at the moment, in my opinion, is off the guidance. When you actually dig into the quarter, it wasn't actually a terrible quarter from Amazon. The net sales increased 15%, which is very good. Obviously, we've seen recently the growth struggle a little bit with Amazon as it comes off the boom from the CV and the ordering online. So this was actually pretty good. And also, you've got to remember the line that we're seeing in every single earnings report: foreign exchange rates. Here we go. So if it wasn't for that, net sales would have actually been up 19%. So that is actually really good amounts of growth from Amazon. Now, North America sales were very positive. International segment sales decreased 5%, but year over year, and also with the FX, it would have been up 12%. So this is once again something very similar that we said with them earnings from like Google and also Facebook. Is it depends what your opinion is on this exchange rate. Do you think it's going to balance out? Do you think that we'll see a bit more of a recovery going forward? So yeah, I mean, it depends what your opinion is on here. I think that actually when you're taking the FX impact, I think that's actually okay, you know, having 12% growth, and it does show how much this is actually really affecting the business. Amazon Web Services increased 27% year over year. Now, this was a bit of a talking point because this is actually a bit of a weaker growth from Amazon Web Services. I still think 27% is impressive, and you've got to realize that Amazon Web Services is going to be a point where the growth does come down a little bit because you've got to such a size, you know, you can't carry on growing at the rates that it was doing, you know, 2-3 years ago, because it's just got so big now. So I think 27% is still okay. Obviously, a few people looking at Google Cloud, which we talked about a few days ago, and saying, look at the rates that Google's growing compared to Amazon Web Services. But we're seeing something similar with Microsoft. You know, their Azure growth was a little bit slower this time round, but I still think 27% is good. Unless we saw a drop off in Amazon Web Services where it automatically jumped down to like the teen range, then it'd be like, whoa, what's going on here? That's a massive reduction. But yeah, I still think that was okay. I know a few people weren't too happy about that. So I'd say Amazon Web Services was another 10% of the reason, potentially, of the drop. Another 10% drop, I would say, was the operating income. So the operating income was slightly weak. So you can see here, North America segment operating loss was 0.4 billion compared to the operating income of 0.9 billion in the third quarter. And also the international operating loss was 2.5 billion compared to the operating loss of 0.9 billion in the third quarter 2021. But you'll see here is Amazon Web Services was still one of the big profit drivers for the business, 4.5 billion compared to 4.9 billion. So we've known this previously. The big growth driver in Amazon is that Amazon Web Services, and that was still pretty good. You'll see operating cash flows decreased 27%, which wasn't great to see. And there was a few highlights here where it talks about the Rings of Power, one of the new shows they've had on Amazon, and how well that did. Also, once again, more mention of Prime and the NFL Thursday Night Football doing well. It introduced the first ever Prime Early Access sale, which we've heard mixed things about this because a few people were saying that this was actually weaker than what Amazon were expecting. And also what Amazon has done, you know, so much is they've reinvested into the business. Same again, they opened up some new fulfillment centers globally. That's obviously to improve customer services, so they have deliveries more quicker. And this is what Amazon's been doing for years now, is keep reinvesting into the business. Also a little bit of a note here that doesn't really affect Amazon, but just something for the PayPal shareholders that do watch my videos out here. They did roll out Venmo as a new payment option in the US, and also they carried on expanding the Amazon Web Services, as you can see here, as they move into new regions. They introduced a new range of new Fire Stick TV devices. They introduced a new generation of Echo Dot. They launched 3 new Kindle services. They expanded also the Ring lineup that they made, which is, you know, the doorbells, which they made the acquisition for a few years back. Now, I'd say this is probably another 5% of the reason of the drop in the share price. Was this quarter was a standout thing for the stock-based compensation. This had a massive jump. This was nearly double of what it was the year prior, and Amazon at the moment is massively going out with a stock-based compensation. Now, obviously the benefit with having stock-based compensation is that obviously then you don't have to pay whoever it is in cash. You know, it makes your balance sheet look a little bit stronger. But I thought this was a massive jump on what they've done previously, which I think is something to be keeping an eye on if Amazon keeps diluting the shareholders through stock-based compensation. And this is something that Amazon does a little bit different to, I'd say, some of the other big techs at the moment. A lot of the other big techs are really focused on share buybacks, and obviously the shares outstanding are increasing a little bit on Amazon. You'll also see there was a big swing in the other income as well in this earnings report, which is obviously to do with the state of Rivian at the moment. And you also see there was a big jump in the net cash provided in operating activities as well in this quarter. And you'll be able to see there was a bit of a jump in the fulfillment side of it, and the technology and content, that was one of the main drivers here. As you can see, this did jump up quite a bit. And also there was a quite a big jump in sales and marketing in this quarter, which I think was a little bit of a standout, which meant there was a jump in total operating expenses in this quarter, which was a massive driver for the amount of cost that they had in this quarter. So when you look at Amazon, it wasn't a terrible quarter. Obviously, what we stated earlier, a big reason for the drop is the guidance, and that's 60 to 70% of the drop, as people digest that and go, oh, if it comes in that 2% range, where's the big weakness happening here? And I think if Amazon do come into the top side of it, then it won't be too bad for the business. And I think that's one of the big worries with Amazon at the moment. I think the other worries you had in this quarter here is obviously the stock-based compensation. That was quite a big increase in Amazon. And then the other part I would say is also the worry around profitability. It's also worth pointing out that Amazon Web Services margins also had a little bit of a decrease in this quarter as well. And I think the other part around this here is the profitability side of Amazon as well at the moment. Now, we know historically Amazon do reinvest into the business. The problem is that we're seeing a big massive reduction at the moment in the profitability of Amazon. Now, obviously some of these investments might pay off in the long term. I think it's just that it's got to the point where you look at Amazon and think, for so long we've heard this story about Amazon reinvesting into the business and we get the rewards. But I think a few people were spooked by how much that did drop in this quarter. And that's why when you look at Amazon, you stare at it and go, okay, 99 times earnings, is it a little bit rich? And when we look at some of the metrics for Amazon right now, the total enterprise value to revenue is a little bit cheaper than what it historically is. The price to sales ratio is a bit cheaper than what it is. When you look at the total enterprise value to EBITDA, it's obviously cheaper than what it is historically, but I think that these metrics will get updated in the coming few quarters. And also from a normalized P ratio, it's about historically where it normally is at. And when you look at the free cash flow, it's down at 41, which same again is about historically where it normally is at. So overall, yeah, Amazon, I think the guidance is the big killer for this one. I do think there was a few concerns around a few of things that I mentioned earlier. And the big thing for me with Amazon is that I've always looked at Amazon and said, they've always reinvested heavily into the business. But the thing is, it's quite hard with Amazon because they don't really give too many numbers out actually how everything is going in that business. There's a lot of moving parts and we don't know exactly what's the driver for profit going forward and what that long-term profitability is going to be in this business. And when you start looking at the business and you look at the metric it's trading at and the profit side of it is that, okay, the business is growing quite well, but what are your long-term rewards from investing in this? What are the long-term profitability parts of the business? We can look and we see Amazon Web Services is obviously driving a lot of profit going forward. The problem is it's very hard to work out what that rest of the business, what that profitability is going to be. And obviously we know further down the line, what's this business going to be judged on? It's going to be judged on obviously the revenue it's producing, but the profit it's going to be producing. Now, it could very much be that Amazon could generate good amounts of profit from these investments. But what we've been hearing for such a long time with Amazon is that it's always reinvesting the company for future profits. And the problem at the moment is we have limited amounts of profit or cash flows at the moment. And that's what's really hurting the business at the moment. So it's a bit of a tricky one. I personally have never been that interested in Amazon just because I believe that it's a little bit of a rich valuation. And I'm a bit unsure on the profit side of what Amazon will deliver in the next few years compared to something, say, like a Google, which I'm very more confident on what the profitability and the revenue growth will be on Google in the next few years. And I do believe that's a cheaper valuation. And yeah, that's the reason why I've never really personally been as confident to buy Amazon rather than Google. But at the end of the day, it is Amazon. We know it's a giant. We know that there's not much worry about Amazon being affected that much from a moat point of view, and it will probably continue to drive growth going forward. So, I mean, this is quite a tricky one for me. Personally, for me, Amazon's never been a stock that I have touched just because of the valuation and how much profit will that generate. But if you're quite confident that Amazon is still going to come in with them higher growth numbers, if you're confident that a lot of the investments that Amazon is making will drive profitability in the future, you might be looking at Amazon at the same sort of levels, and that's not adding in the stock compensation in, and you might see it at the same levels as 2018 and go, you know what, this is a buying opportunity in Amazon here. So yeah, that's my thoughts on Amazon at the moment. Personally, it's not one for me. I can understand why some people would take this opportunity, but I personally would be looking at, or I'm going to be looking at some other opportunities in the market at the moment. So yeah, I hope you enjoyed the video. As always guys, hit the like button and I'll catch you in a bit.